Good evening everyone, this is Srikanth Rajan and welcome back to the Market Pulse video where we discuss about what happened in the market last week and what could be expected the next week. So starting off with last week, of course, we had a week which was directionless kind of initially because the markets did not have a clear direction as discussed in the last Market Pulse video. But then we had a few activities that happened which kind of gave a slightly negative direction to the market. So, if you remember last week in Market Pulse, we had discussed about the Fitch downgrading the US economy, and that led to the fall in the US and that led to fall in India as well. As the markets were kind of recovering, we had Moody's who again came out and downgraded the banks in the US, and banks in the US fell. Followed by that, the global markets again went into a slight weakness. From the fall, the markets were kind of trying to recover, but then if you see the entire last week, very few times FIA is bought, that too very small number, but most of the days they've sold. And on Friday, they've sold even bigger. They've sold for almost 3,000 crores. So FIAs have gone on a kind of erratic buying and selling, and more of a selling happening at this point of time, which is kind of taking the market negative, in India as well. So one good thing, of course, is last week we had a data which said that SIP and mutual fund investment have hit a record high in India. So that is, of course, a very good sign in the market. And also the income tax and GST collections have also hit record highs. So with all this, India as an economy is looking really strong, but then these temporary things are going to hold back the market for now. So if you look at last week, there were also some announcements from the IT sector, especially Infosys announcing their readiness for AI, and that kind of gave some push to the IT sector. We could also see some important stocks like Zensar hitting all-time high, and of course things were looking really good on that side. But as markets were looking like about to recover was when from Thursday we could see the markets falling. The same thing happened on Friday as well, and the markets have actually closed in with a slightly negative trend because the markets have finally closed below 19,400. So the trend at this point of time is slightly negative. Globally, the trend is negative, but then there is one more very important news which has to be focused on at this point of time. So there was an update just a few hours back that the north eastern side of India, that is near Ladakh, the eastern side of Ladakh, has had a very important activity wherein there was a clash between India and China, and there are more than 68,000 soldiers moved to this Galwan Valley near Ladakh, and this is not a great sign. Of course, talks are going on to amicably settle things, but if the talks don't come to a conclusion, there are chances that can affect the market also because this is a yet again uncertain activity. So, of course, I'm not expecting things to blow up beyond proportion, but then this could give a slight negativity to the market. So, how the market is going to absorb that tomorrow would be a big question mark. Next important thing, it's going to be Independence Day holiday on Tuesday. So August 15th is going to be a stock market holiday as well. So market would like to be cautious because of two things. One, people don't know how the India-China clash is going to affect. Two, US markets would open only after Indian markets close tomorrow. So with both these uncertainties and August 15th being a holiday for Indian market, I am expecting Indian stock market to close negative tomorrow. So that is expectation. Let us see how the markets take that. Take this with a pinch of salt, but uncertainties are definitely not welcome in the market. So this is going to be really uncertain, and markets may not like it. So that's something that we can talk about it right now. So apart from that, this week we have a few important details coming in the US as well. So we have the FOMC minutes coming out. And of course, the last week, if you see inflation data that came in US was slightly higher compared to last month. So, but of course, it still has come below expectation, but still it is higher than last month. And similarly, if you look at India, the RBI also came out saying that they have slightly increased the inflation target for India, and not only that, they are seeing some inflation rise in India because of food prices going up, especially tomato and onion. And along with that, to kind of remove some liquidity from the market, the RBI did announce the CRR, the cash reserve ratio, to be hiked in the banks, which has put all Indian banks also into a negative zone at this point of time. So overall, for a short term, markets are looking bearish. But do remember, the important support of the 19,500, 400, 500 is gone. So the next important support can be seen in the range of 19,000 to 19,200. So this is the important support area, which I am not expecting to be broken. But if broken, then the markets are going to be into a more of bearish state for some more time, longer time. So that is expectation. In fact, yesterday I was reading some article where ICICI Securities research says that they are expecting Nifty to touch 20,700 by Diwali. So, see, when markets are positive, every damn media out there comes out and tells you brand new numbers about positive high. But I don't know whether if you ask him today, the person who's suggested that markets could be by 2,700 by Diwali, will he come out and come with the same view today after the India-China clash? I am not sure. So this is how the markets are. Nobody can ever predict the market. Markets are only, to be staying invested and make money out of it by staying invested. But if you are bothered about all these small events, remember, as long as an economy called India is no more, that is the when probably the markets will wipe out your money. But that's not going to happen at all, isn't it? So that's kind of a situation that people expect when market starts falling, but it's not the case. So when market falls, you don't have to be worrying. In fact, use it as an opportunity to add fund and get some good stocks that would give you some great return. Let me remind you, I'm not a SEBI registered analyst, but of course I can talk to you from my experience where I've made money by investing into the market when the markets were bad. So there is a saying in the market, right? Be fearful when the markets are happy, and be happy when the markets are fearful. So we need to be greedy when the markets are fearful. So at this point of time, markets are kind of seeing some fear, and I am sitting with almost 50% of capital lying unused. I mean, it is of course invested into debt instruments. So it is time to slowly move them in stages whenever the market falls. So that's what I am expecting to see. Now I don't see a number that 19,000 is the bottom, 19,200 is the bottom. No, nobody knows the bottom, and across the globe nobody knows that. But the only thing I know is whenever market falls, I add fund into the market. So that's the only thing I know that has actually made me money in the market in all these years. So that's it. This is what I have to share from my side. This week, of course, again looks directionless. I don't have a clear number in mind for the expiry this week. But of course, I am expecting the market to be kind of within the range of 19,000 to 19,800. So this is the expectation. But however, it's going to be a slightly bearish week is what I'm expecting. And it's a shorter week because of Tuesday being a holiday. So markets are going to be volatile. Now tomorrow since Tuesday is a holiday, the Fin Nifty expiry would be tomorrow. And that is going to cause a higher volatility with all these activities in the market. And also the result season have actually completed. So there are no more results to be talking about. So until the next result season comes, the markets are going to be volatile the way it has been. But of course, with every change in news in the market, things can change. So that is how the situation is. So traders who are new in the market, I would kind of suggest to stay away from the market at this point of time. We ourselves are sitting with a very safe trade at this point of time and will not be going for any high risk trades till we have a clear direction of the market. So this is the situation now. But for investors, it's very easy. All you need to do, if at all you see a portfolio going down, just be happy that it's time to invest more. Nothing else to be looking at, and just continue to make money by investing at the right time. So that's it for now. Wishing you all a great week ahead. Let's see how this week goes, and tomorrow we'll catch up tomorrow morning with some details. But then I'm expecting more details to be given to you only on Wednesday when the market opens after the Independence Day holiday. So wishing you all a happy Independence Day in advance. This is Srikant Rajan signing off. Until we catch up tomorrow morning, have a great week ahead. Stay invested, make money. Let's all grow financially together. Goodbye. Have a great week.